Happy St. Patrick's Day, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, March 17th, St. Patrick's Day. Okay, after yesterday, I don't know about you, but a little luck of the Irish would not be a bad thing looking at the damage that was done, at least to my portfolio yesterday, and I hope you fared a little bit better. But, we've been primarily focused in the cyclical value arena, industrials, airlines with jets. We're in 3M, we're in GM, all the things that have been working in recent weeks. And, the last couple sessions, the pots come off the boil on the IWM names. And so yesterday, even though SPY was flat and the Qs were up, IWM and IWM names took a decent little hit, and you never like to see that, but it's part of trading. Some of the intraday trades mitigated some of the damage, but not all of it. And so let's dive in and see what we got to look forward to today. I'll go through the indexes, the FATMAAN names, and take a look at TLT. It was interesting yesterday. We had that 20-year auction at 1 p.m. and the initial reaction was that yields fell as the auction went fairly well, but then by the end of the day they had faded that move and closed yields back over 1.60. I don't know where it ended up exactly, but today we've got another important auction at 1 p.m. The 10-year tips inflation protected, and then we've got Jay Powell at 2 p.m. with the press release for the FOMC. And then, of course, his presser on at 2:30, where he will, have his statement and then field questions from the news corps. And so we do have quite a bit of catalysts in front of us today, and we'll just have to see how the market and rates, all that stuff, react to Jay Powell this afternoon. So let's get into SPY. I think there was some really interesting price action yesterday and some really clear levels that if you're an active trader, hopefully you're able to take advantage of, at least in a certain respect, catch a couple little moves here and there. So let's look at SPY 2 hour. We had a little gap up, and then they pulled the rug pretty hard, came right back to this 395, which we had marked as support. This prior high right here, that was our support level, and it tagged that down to the penny, and then put in a little bounce to the close. One thing we're going to need to watch as far as the indicators, notice here that the PPO has flattened out. The momentum behind this move is flattening out, and we've got a pending bear cross. Notice the momentum wave here down on the histogram is quite low, and so we would have to be a little bit concerned if we were to get this high level PPO bear cross coupled with a price move below 395, because you can see here, once you lose 395, then you're pretty much assured to come down here to 392 and test this gap. And not a massive percentage move, but $3 is $3, whatever. Here on the 30-minute chart, you see yesterday's action where this 395 held on that tag. So today, keep 395 in focus. I do have an intermediate level here that may provide some support if this if 395 breaks down here at 393.50. But then you can see the gap here at 391.74, roughly, what is that, $2 wide, down to 389.58. Let's just call it 389. Notice this high or large volume over price support bar here, right in this 389 area. You don't want to lose that, or then you're on the other side of support, and then that would of course become resistance. So really got to hold the line at 389. You know, if we had to, we give up, you know, a gap fill here, but the trend is still higher. We haven't lost the RSI trend here. PPO is still bullish above the 0 line, so those would be the indicator levels that I'd be watching. Qs yesterday, gap higher, made a really nice run early on to tag this 324 resistance level that we've had marked all along, and then they pulled the rug in the afternoon and brought it all the way back to fill the opening gap and back tested this 319 area to the T, which we had also had marked, and then they bounced it into the close. Let's take a look on the 30-minute chart. It's a lot clearer. So, I mean, if you're an active trader, which I assume some of you are, down here, gap open, right? Gap open higher. First thing you always do on a gap, whether higher or lower, is simply mark it. You mark it because it's a target. And whether it fills in 20 minutes or 2 days from now, it's a target. So you put in that gap. So we had 322 on the board as a level. As price moved through that, that was a buy signal, as it always is. Recapturing a level from below is bullish. You can get long against that level. You got a nice push to 324. That's $2. What do you do at 324? Well-defined resistance. 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 That would certainly be a place to either be on guard for a reversal or to close out your longs after your $2 advance, and certainly an objective level to be short against 324. If you go down to a 5-minute chart, you'll see that there were 6 or 8 5-minute candles that bumped its head up against 324 and could not get through. And if you held your ground and you didn't get antsy and you didn't get impatient and you held your ground short against 324, you got a really nice payday, because it let go, came right back down to 322, where you either could have covered or waited. If you if you covered, but then 322 broke, that was your second entry. And before it was all said and done, a move from 324 to 319, whether you got all of it or half of it, still very objective and beneficial trade if you were using these levels to gauge your trading. Now this morning, it was about 6:40 as I started the video. Futures were flat as a pancake, so not a lot going on. So I don't anticipate anything before the open. I expect muted action ahead of Jay Powell. Just maybe a drift higher or drift lower. there aren't going to be any big moves ahead of Powell. So, but anyways, if 322 is recaptured from below, whether it's before Powell or after Powell, it doesn't make any difference. That's bullish. You can get long, and then 324 will again be your decision point. If for some reason 319 is lost, then I show support at 317, and then there's probably a level in here. I see this large volume over price bar that I don't have marked, which would come in about 315. So I would mark that as a potential level of support. So 317, 315, and I know 313 is really important. I have that on the board at on my 5-minute chart, on my active trading chart. So 313 is important, but it seems like the Qs have stabilized and made peace with the higher rates. That may change if Powell upsets the apple cart and rates take a leap higher this afternoon. I'd expect the Qs to feel it to a certain degree. IWM took most of the heat yesterday. You can see, right from the get-go, as soon as the open happened, they faded it right from the start. We had marked yesterday. We said 232 it had to hold, or 230 was in the crosshairs, and that's exactly what happened. Now it came down, touched the top of the gap here at 229 and bounced, but notice the high level PPO bear cross here, so that if there would be a bounce up to 232 but it can't take it out, that would be an objective level to short, at this, because that's resistance now. And certainly if you made a move below 229 in this gap, that's another objective shorting level. Now, the thing we need to talk about is, our open positions, because we have a lot of positions in this space. One or two ways to handle it. If we see continued weakness in IWM, because this is a concerning look right here with that bear cross. Notice right here we had one, pretty substantial move down. We're not going to want to sit through, a gap fill, this gap fill and then this gap fill down to 23, $10 lower. One or two ways, just close out some positions and take down risk in the value cyclical sector, or hedge it out with some IWM puts and say, you know what, and this I believe to be the case, longer term, there's going to be a bid back in value and cyclicals. These names are going to go higher, but it might not be, for 2 weeks. So it kind of depends on your time frame, your positioning, etc. All I'm saying is, don't sit idly by. Protect your portfolio. Trade IWM. If you lose 230, get short. If you get a bounce up to 232 that fails, get short and hedge it out. So you'll lose a little bit on your individual positions, but hopefully you can gain that back by your short exposure on IWM. Here's the 30-minute chart. Same thing. They just faded it. They tried to hold 232 for a while, but they couldn't do it. And came down here to 230. So I really think this 230 is a key spot. And then you see the various gaps that need to be filled down below. And, you know, a move below 230 and certainly 229 might get the ball rolling downhill pretty quickly. So you want to be ready for that. Facebook, a lot of relative strength. We had talked about this move several times, but yesterday, gap higher. We talked about 276 as being resistance. Once it crossed above 276, that was your buy level. Recapturing from below, we said that 280 was the target with an outside chance at 284. Took out 280, got halfway up, and then they brought it back for the close, back to 280. So it's pretty simple from here. Hold 280, 284 is your target. Lose 280, they may bring it back here to 276. So 280 to me looks like a really nice pivot. Facebook's been doing really well as some value traders come back in to Facebook, which they think has apparently gotten too cheap, with good valuation support, etc., etc., etc. Apple. I've been very pleased with how these levels have been playing out. I mean, we talked about 120.50. We talked about 123, came up and tagged it. Bull flag, broke out, stopped on a dime at downtrend resistance, gapped over it, which is a very common technical move on a bullish setup. You know, don't deal with resistance, just hop over it. You know, hop over it so you don't have to deal with it. So now you got a little gap here that I haven't marked in, but went right up to 127, stopped on a dime, and then pulled back to the opening gap. So it's pretty simple. If Apple can take out 127, that would be pretty important and open up the door to 130, 132, 134. If it can't do it, then most likely, you know, coming on back towards 123 and a back test of this downtrend line. Of course, another option is, you know, just oscillating and building some energy below 127 for possibly, you know, a breakout at a later date. That would be, you know, more or less bull flagging action, you know, say between 125 and 127. If it just oscillated here for a few days, then it would be in position, you know, for a breakout down the road. This one, I kind of, there was a lot going on yesterday, and I did not actually check in on Tesla until the end of the day. And I was quite surprised because, you know, the Qs were strong for most of the day, and they faded Tesla right out of the gate. I mean, we had this 705 marked as a resistance level. It got to 708, which, I mean, when you got this kind of compressed scale, I mean, it's hard to, you know, fine tune a $700 stock to a couple bucks, but they brought it right back down for a back test of 670. So if you're a Tesla bull, you can be long against 670. And as long as it holds it, you can look forward to a move back up to, you know, 705, 708, 710, something like that. But if you lose it, you know, you got to quickly switch gears, you know, honor your stop, and then potentially get short because not a lot of support until back here at 620. So you got $50 of downside below 670, and you've got about 35 bucks of upside from 670 on the bullish side. But if you break out here, then you've got, more of an open path. So kind of depends on how they handle tech and Tesla in particular. It seems like yesterday it traded much differently than the rest of the FATMAAN names. And also, don't forget, Kathy Wood's ARKK, ARKK, is the ticker symbol. That's their innovation fund that is loaded with Tesla. If Tesla is down $35, ARKK is going to be down. And I think it was down about 2% when I checked on it in the afternoon. It may have bounced into the close, I don't know. But that may be a way you want to trade a Tesla proxy if you want to do that. Microsoft. I added an uptrend channel here. It may be helpful to you. You may just want to go from level to level. But we had this gap from the other day that had never been filled. And at the close Monday, we were right here at 235. And just like we talked about before, sometimes where there's a known or significant level of resistance, what price will do is just hop over it. And that's what happened yesterday. Gap higher, got into this gap, filled it, came on up to 238 here, and then went into this bigger gap, and then found resistance halfway through up here towards 239.50, 240, and then came back below into the close. So I left this gap in on purpose just so you could see the levels and see the price action. But now, I'll take that out. And I think this level here at 237.25-ish will be important today, because if it loses it, it'll probably come back here for a test of yesterday's open. And then you've got a gap down here between 236 and 235. You've got some trend support here, but that gap would probably fill if it's a down day. On the upside, if price were to recapture this 238, good chance if there's still some positive tech tailwinds, that it could come right up here to fill the remainder of this gap up to 241.21. So Microsoft is in a nice little, it's choppy, but you can see the uptrend. Amazon was a nothing burger yesterday. The first time in a long while, the free 50 club didn't really work. Price traded through 3,100, but then kind of hit a wall here at 31.25, then came back down. So kind of a choppy nothing burger day for Amazon. I'd again just stick with 3,100 as your pivot. Bullish above, bearish below. Google had a nice day, at least started out. And we kind of called this, to the T, because we had said and had pointed out this open gap from the other day. And so when there was this move above 2075 into the gap, it raced right on up to 2100, went a little bit beyond, but closed that gap. And that was a $20, $25 gap. So, that's not chicken feed. Then, like everything else, they rolled it over and then brought it back into 2075. But big consolidation area. I can't predict which way it's going to go, but now we can kind of see from 2000 to 2100, $100 range here. And so a breakout above, figures 2200 at a minimum, and then of course a break below figures to fill the rest of this gap and come down to 1900. So I mean, nice looking chart. It hasn't given anything up, but it hasn't, really broken out yet. Netflix, more or less a nothing burger. Move higher, got up to 535, which was resistance that we had pointed out, and then they brought it back to 525. So pretty clear. 525 is your pivot. Upside target 535. Downside target 517.50. And then if that doesn't hold, back here at 510. I wanted to show you TLT because I think everybody's a bond trader now, right? Everybody's focused on rates, and it is important. We've been in this short TLT trade for a while. This area in here was a gravy train. Here was our flat bear flag, and now we've broken below to test this prior low here at 136. So support. Yesterday I thought it was interesting where TLT opened higher, not a lot higher, 40 cents higher. And then they put on a fade the whole day and brought it right down to the prior low, right down here, just below 136. And then when they had that auction, TLT put in a fairly sizable spike, but then they started fading it into the close. They didn't take it right back to the lows, but they got pretty darn close and bounced it a little bit, into the close. From a technical standpoint, it's pretty simple. They either hold 136 or they don't. It is a crowded trade. A lot of people leaning bearish on TLT, and that's, the one thing that worries me. I'm not the only guy with a chart, right? Everybody knows this level. Everybody's watching it. Everybody's short, and Jay Powell knows that. God knows what he might say about, rates this afternoon. If we got a spike, I'm probably just going to close out. Or what I may do is if TLT pushes down towards 136, like 1 o'clock, I may sell some 130s just as an element of protection. I want to hold my position if I can, and by selling some downside puts and spreading the position, if they spike it, then I'll be protected a little bit. So that'll be like a game time decision. But all I'm saying is, if whatever Powell says, the market says, rates are going higher, and it loses 136, there's nobody home. There's nobody home down here. It could go really fast. It could, pop through 170, 175 on yields. And then once it gets to that point, I think you're looking at a run towards 2%. And that would be a phenomenal trade to be short TLT, if that were to happen. Now, the flip side of that, of course, is, they spike it and everybody that's short has to cover. You could get a bounce up here into the 144s, back up to tag the declining 50. And if you weren't in it short, and you got some big, plunge in yields and spike in TLT, I think you could get short up here because I think rates eventually do go higher. We're going to have they keep saying the strongest economy since 1983, and I don't think they can pin yields down for long. I think they're going to rise. So, whether it happens, this week or in a month, I think yields are going higher, and I think cyclicals are going higher as well. So a lot riding on this afternoon. I'm sure Powell knows that. The market knows that. Everybody knows that. So let's just be ready. And all eyes will be on that this afternoon. So we got a St. Patrick's Day. If you're holding cyclicals in value like I am with IWM, let's make sure you get some protection if IWM starts to wobble. Hedge out your risk. There's time to make money and there's time to tread water. And certain times you just need to tread water instead of losing. So grab some protection if you're loaded with cyclicals and value. Tech has remained resilient in this little 2-week window. It's held its own. But if there's a spike in yields, I would expect tech, at least the bubble stocks, to wobble and pull back. You may want to look at the ARK funds if that were to happen. Kathy Wood has a lot of super high valuation names. And so if yields make a big move higher, I would expect ARK family of funds to feel it probably a little bit more than most. Let's watch SPY for a potential rollover. We need to hold the current levels to kind of keep things simpatico. And if we can get a little luck of the Irish here and hold our ground, that would be great. But be ready for a pullback. Let's see what happens with Powell. A lot riding on this afternoon. So let's wrap it up there. If you're new to the channel and like the analysis, if it helps you, like it has many others, please hit the subscribe button and the alarm bell. Then you'll get notified of all my new video content. And also, if you jump over to the show notes, places to register for my content, where you'll get everything in a nice, neat email each and every day, midday, after hours, whenever thoughts come to my mind, I'll send out an email and you won't miss a beat. If you've been with me a while and things are going well, please pass the link along, my name along, to others in your trading circle so we can expand our audience. The more the merrier. And we can continue to expand our trading room with a group of aspiring traders that are all there to help one another. So I appreciate your time this morning. This has been Chris Buss with Traders Profit Compass. Have a good trading day and talk to you next time.